some news on State Bank of India where it is going to be raising up to, it's just a board approval right now, where they're raising up to 11,000 crores via perpetual debt. Remember that this is debt and not equity that they're looking to raise. So over 10,000 odd crores is what they're looking to raise at this point in time. We're going to try and get in touch with the management as well to get more sense. And okay, I think we have Siddharth Purohit of Angel Broking who's joining in for a quick take on this. Siddharth, 11,000 odd crores is what the board is looking to raise or is taking an approval for via debt instruments.
Hello.
Yes, yeah, Siddharth. Hi. Your view on State Bank of India.
See, as we post this news of merger, I think now what even management was saying some time back that they are looking for maybe better loan growth going ahead. So they are gearing up for kind of more capital raising, it seems. And possibly when the loan growth picks up, they will need more both tier 1 as well as tier 2 capital. And I think this one will help them meeting additional capital requirement. So I believe this is part of regular business, so nothing new. But this is a kind of indication that that the management is gearing for incrementally better loan growth in the coming quarters. So I would read it that way.
Siddharth, in terms of treatment of this money, this is perpetual debt. There's no maturity. So can we treat it as equity?
See, it is kind of, you can consider this as a cost equity, whereas, I mean, this is not exactly a part of equity, but it is considered as part of tier 1. So what happens is that, it helps you meeting the tier 1 capital ratio. And obviously, there is a note repayment schedule on that. So issuer's ability a big function of ability to issue such a huge amount. So there has been earlier instances of other banks trying to do a big amount in tier 1.
But SBI, of course, is SBI, right? So
yeah,
they can do it.
Possibly it should go through and will be a kind of confidence booster in terms of capital raising.
Okay.
So I would consider this as a part of regular business activity, and I would read that management is looking forward for better growth in FY18. That's why they are preparing themselves right now.
Okay, just a quick question. In terms of credit growth, what are they tracking right now, State Bank of India, and how much are you anticipating them to track in terms of a consolidated balance sheet post-merger? I know it's a tough call right now, but any estimates that you would be working with, and similarly for tier 1?
See, as far as your standalone SBI is concerned, I think they should be doing somewhere around 12 to 14% kind of growth this year. Earlier they had indicated around 11-12%, but I think now what I sense is that SBI will start picking up growth, because now somehow we are seeing that credit somewhat picking up, not exactly in a big way, but there has been a kind of green shoots available which is visible. So possibly 12-13% is what one should be satisfied this year. But FY18 is certainly going to be a better year for SBI, because by that time your consolidation would have been completed for all these associate banks. It would be pretty difficult to say how much each of these associate banks will do. But on a what I believe is that for the associate banks, SBI will try to first rectify their balance sheets, or maybe take more NPA into account and provisions, and then possibly they will look for a aggressive growth in FY18. So I may not be looking for a very aggressive growth from the associates point of view. So it will be very early to take a call on the credit growth for a combined entity for FY18. But certainly it will be much better than FY17, I believe. Okay.
Well, Siddharth, in terms of any more details which you would be looking out for up to the merger, what other kind of nuances could we expect? In fact, Siddharth, hold that thought. We in fact have Anshula Kant, CFO of State Bank of India, joining in. Hi ma'am, thank you very much for taking the time out. So if you could just take us through what the board approval is going to consider. It's basically raising of perpetual debt. Is this ahead of the merger?
No, I don't think it has any real context with the merger. We have been working out different ways and means to raise capital over the last few months. So, the time seemed to be right at this moment.
Okay, Ms. Kant, then can you tell us the details? Is this 15-year paper, 12-year paper? What is the cost? Anything, any details on the nature of the perpetual debt?
Okay, right now we've just taken approval to go ahead and raise, but the pricing, etc., will be fixed after some time, when we actually start talking and go into the market for it. But it will be a hybrid, the 81 issuance.
Okay. So what kind of a capital adequacy are you targeting?
Lata, you would have seen we already have a very strong capital adequacy in the moment. And this year we don't really need any capital. But we are preparing ourselves for, maybe the next couple of years. So, if you see today in the overseas markets also, as well as in the domestic markets, not so much in the domestic, but overseas markets, there is a strong appetite for this kind of paper.
Overseas market?
Yes.
But, the Khan Committee recommendations were that even domestic buyers of debt, like, insurance companies, should be allowed to buy this 81 paper. Are you preparing for that kind of a market as well opening up?
Oh yes, we are hoping that that will open up, but when that will happen is a moot point, because that conversation has been going on for quite some time now.
Oh, it's not tomorrow, is it? Because tomorrow the Reserve Bank Governor had said that on 25th August is going to announce something for the corporate debt market. You're not expecting this approval anytime soon?
This is not to be allowed by RBI.
I agree.
Think the insurance companies would be, permitted by the
I agree.
IRDA.
It is an IRDA, Government of India issue. But
Exactly.
to your knowledge, it is not getting resolved or getting decided anytime soon?
To my knowledge, I don't know when it will.
Okay, so this debt, are you looking at to raise it in this fiscal at all, or in this calendar?
Oh yes, we are planning to raise it this fiscal, depending on what pricing and what appetite we see.
Okay, and what about equity? Is this the only thing you are going to raise? Are you all separately even contemplating equity raising?
Not as of now, because currently we are in the process of our merger. And unless that merger is out of the way, it is difficult to contemplate a pure equity issue at the moment.
But debt issue can be contemplated even when you are in the throes of a merger?
This is a quasi-equity issue. This will form part of the tier 1 actually.
Yeah, so this will not, the buyers of this quasi-equity, quasi-debt will not want to know the merger contours. This you can sell even before?
Because there are swap ratios, etc., involved in the pure equity play. But this is more, it's on the fixed income side. Not exactly the fixed income guys, but more or less on that side who have an appetite for this. Indian paper is very, very scarce in the market. I don't think there have been any recent issuances. So we do believe that it's a good time. And whatever sharing and disclosures we need to make, we will do that. The fact is the associate banks are about 25%. And the big picture comes from SBI alone. So we do believe it can be done.
Okay. Ma'am, suppose you were to do it today, what may be the cost?
I won't like to speculate on that.
No, it's not a speculation. I'm just asking you for the prevailing trends. Okay, it's not SBI, SBI-like company. What is the going cost of money for perpetual debt?
But there is no parallel right now for perpetual debt for an SBI-like company. Out of India, who's done it? It is the other smaller banks who have done small pieces domestically over the last few months.
What is the spread over sovereign likely to be?
No, it's very difficult to, because we are going to, I don't want to get myself in a loop over there.
Okay.
We are trying to get for the tightest price possible.
Okay.
We'll see if it suits us, then we'll go for it.
All right, just to end where my colleague Ekta began, because of the merger, would you want to increase any amount of capital at all, or to put it the other way around, if you did not raise capital and the merger happened, would your capital adequacy dip by a few basis points?
It would dip by a few basis points, certainly, Lata, that we've already shared. It will dip a little bit. But the fact is, still, despite the dip, we are so much well above the regulatory requirements. In FY17, we are very comfortable.
Okay.
It is for the next couple of years that we are looking to do this.
All right. Thank you very much, Ms. Kant, for joining us. All right. Over to you, Prashant.
Thanks, Lata, for that. Appreciate it. Let's just take a very quick break on that note. We'll be coming back. Ashwini Gujral is going to be with us and we take you through what he makes of the market, some trading ideas, strategies. Manishi Ray Chaudhary.